Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me, Mangalam as well as Ekta. Well, another trading session, another good one actually from a bullish perspective. Nifty gradually moving towards the 25,200 odd mark, but last 60 minutes are going to be crucial. We have the weekly expiry that will play out as well, guys.
Yes, good afternoon. We've been, it's been a very interesting day. It's been on the positive side. Yeah. We opened slightly softer. Thereafter, there was a build-up. Every time we went closer to that 25,200 mark, there was a wee bit of sell-off. Then from lows as well, we saw that purchase once again, telling you that we're consolidating at higher levels, which is not particularly a bad thing. In fact, today as well, the high was a little over that 25,200 mark. If we can stay above that for a fair amount of period, then we will see those shorts getting squeezed, perhaps.
Hi, guys. Yes, absolutely. I'm definitely wearing the wrong color today because we do have the Nifty, which is hit that 25,220 odd mark with 30 points off the day's high. So overall, you'd have to say it's a quiet day. But if you look at it on a month-to-date basis, the Nifty's already gained around 2.36%. The Midcap index is up around 3%. So we've done well. If you're just about in a tighter range in today's trading session, that's par for course. But on the show today, the market is headed for a strong close on a weekly expiry day. The Nifty hits 25,200 on an intraday basis, while the Nifty Bank approaches 52,500. Mid-caps trade in line with key indices. Capital market stocks and exchanges in focus as sources tell CNBC-TV18 that the SEBI has received a number of representations to continue with weekly expiries. More on the story in just a bit. IndusInd Bank's new MD and CEO, also speaking to CNBC-TV18, lays out a 4-point plan to make the bank substantially better over the next 3 years. Trend's second quarter business update reflects a 17% growth year-on-year, which disappoints the street. The stock is one of the top losers on the Nifty, and CNBC-TV18 accesses the US FDA observations on Aurobindo Pharma. All this and more lined up over the next hour on Closing Bell.
How do you position yourself, though, in the final hour of trade? We have Mitesh Thakur, who joins us on the show from Bonanza Portfolio. Hi, Mitesh. What do you make of today's pricing action? We're consolidating at higher levels, but the good news is we're continuing to make higher highs and we're protecting the previous day's lows. Your view, we got more to go on the upside?
Good afternoon, Ali. It's been 4 days of rally. There's no sign of weaknesses yet. What can happen is that possibly with the expiry coming in, some volatility may happen, but I believe that the directional bias is on the upside. So in case you get a decline, that will be a chance to buy into the index. Between the two indices, I like the Bank Nifty more, and I believe it's done the target of around 56,300, 350 zones, and now could head towards 57,000 plus level. So positive there, and that could in turn propel the Nifty. On the stock side, I have a buy on Federal Bank with a stop at about 197.5 and look for a target of around 206 here and 361. That's a buy as well. 361, a buy here with a stop at 1,059 for targets of level.
All right, Mitesh, we'll come to you shortly once again. The Nifty holding up fairly in, good green territory around that 25,160 mark. Like you pointed out, no real selling pressure right now is what we witnessed. But let's move on to an exclusive story. A large number of representations with regard to weekly options expiry have been made to the SEBI. Yash joins in with more. There's been some positivity on BSE over the last few trading sessions so far. Yash, what have those representatives said and what is likely from here on?
Well, a final call on whether to remove weekly options expiry or to continue with it will only depend on SEBI's consultation paper and the decision taken thereafter. But at this point of time, what we've been given to understand from our sources is that several suggestions have reached SEBI's doorstep, either through letters or emails or various different forms of representation coming from brokers and traders. And mostly these brokers are seeking continuation of the weekly options expiry. Also, what we've been given to understand from our sources is that exchanges, whenever they get consulted on this matter, are likely to echo the views of the brokers on this particular matter, which is that they may ask SEBI to continue weekly options expiry. On the other side, from SEBI's end, what we've been given to understand is that the market regulator is in no rush to bring out the consultation paper or take any decision, and SEBI's move on this particular change is going to be very calibrated and detailed after it goes through each and every consultation or suggestion which reaches its doorstep. Apart from that, what we've been given to understand is that at this point of time, market regulator SEBI is in the process of collecting and studying data. Only after that, the official consultation process would begin. Right now, that official consultation process is yet to begin, and SEBI is in a phase where it's still studying the data about options expiry and derivatives market before it moves on to the next step.
Okay, all right, Yash, thanks very much for that. In fact, we do have some important data or a story coming in on the Tata Group, so we're going to get to that in just a bit. The government cannot be a silent spectator to the court, a coup attempt by 4 trustees of Tata Trust. So this is an extremely important story which is breaking on the screen, and we're definitely going to get Parikshit on board to talk a little more about it. Some more details which are flashing. The government cannot be a silent spectator. So there is a coup attempt by 4 trustees of the Tata Trust. That's what we're picking up in terms of sources at this point in time. More details on that in just a bit. We will, what they have indicated is that the government is fully seized of the differences between the trustees of the Tata Trusts, and 4 trustees have been named as well. So we're going to get Parikshit on board to talk a little more about that. More details coming in soon. But in the meantime, Mitesh, a lot is moving in terms of the Tata stocks. So while we stick by the story and wait for Parikshit to join in, any of the Tata Group stocks that you like or, you would want to comment on?
The one stock which has done extremely well is Tata Investments. It had a massive rally from levels of sub 7,000 to over 11,000, giving a pullback. I think this could be one stock, which traders should look to try and get in again once you get a pullback to about levels of 9,000, 8,900. I think that's the big support area. I think around those levels, if I get it, I think that's one stock which will interest me. That apart, I think, the other stock which I like is Tata Technologies. Disclaimer that we have some options positions over here. I think the breakout over here happens about 724, 725. I think once that is clear, good chance that the stock can do about 770.
Right. Is there anything else in particular from the Tata Group that you like?
That's all.
All right, that's all. Fine. What we'll do is we'll, take note of that story. We'll try and connect with Parikshit, who will give us deeper context as well. In the meanwhile, the Global FinTech Festival is currently on right now, and we had a conversation with the MD and CEO of IndusInd Bank, Rajiv Anand. Ritu spoke to him from the sidelines of the Global FinTech Fest about, importantly, the bank's key priorities and his vision going ahead, especially after everything that has taken place out there. Listen in.
4 key priorities. One, like rightly said, build the trust bank with regulators, with investors, with depositors, and most important, our employees as well. 2 is get the business momentum back. I think it's a bit slow at this point in time. We put out our balance sheet numbers a couple of days ago. 3 is, start to build a profitable franchise, which is a lot more balanced, both on the liabilities and asset side. And finally, we are here at the Global FinTech Fest. I think there is so much of work that we can potentially do to unlock productivity, for the bank. And I'm, in a sense, here to learn of what we can use, from the Global FinTech Fest in IndusInd Bank. We've done some work around this, particularly around our gems and jewelry business. We are quite comfortable in terms of the exposures that we are currently carrying. It is to better rated corporates, within, or the market leaders, within that space. Secondly, on MFI, I think the general commentary is that the second half of the year will certainly be, much better than where we are today, and that should play positively for us. The resolution is just an enabling resolution. So, but if you look at the numbers from a capital adequacy perspective, we are well above 16%. CET1 is well above 15%. So at this point in time, IndusInd Bank doesn't require capital.
All right. No capital requirement for IndusInd Bank. The quarterly update was fairly soft as well. How is the bank positioned from an investment standpoint? We do have Dilip Bhatt, who's joining in from Pedigree Advisory. Dilip, always a pleasure speaking with you. You join us after a long time. The banking space, a lot of people are bullish on that. IndusInd, does it find, some takers because of the kind of destruction that it's seen from the price standpoint, and now everyone's talking about recovery mode from here on? Do you think, would you be in that camp, or would you avoid and look at other banks as investment opportunities?
Sure. I think I would certainly look for recovery in this particular bank. I think they've got a reasonably very good person at the top at the moment, and quite capable at that. So I think we all are very optimistic that the recovery should happen sooner than later. I mean, whatever that has happened, that problems are very much in front of everybody. I think they are done and dusted, and probably they are also priced in to a great extent. So I would say that, does it need further capitalization? I would say some amount of further capitalization would really help the perception to improve further. But certainly, I would look to buy from these levels and maybe slightly lower levels if we get an opportunity.
Dilip, hi, welcome to the show. The WeWork IPO has been fully subscribed, and I'm starting with that because there's so much interest in the entire IPO market. Have you looked at that space and maybe a couple of its competitors such as SmartWorks? Is that a space that interests you?
Well, not really. I've not gone so much into depth of that, so will not be in the right position to make any comment on that, on those particular things.
LG. Okay. LG is coming at around 35 times. We spoke to the management earlier today. They said that they're confident on growth. They have various levers in store to push up margins from here on as well. And they assured investors, don't worry about the royalty. That's not going to go up at least in the next 1 to 2 years. Will you look at LG, or do you say that we have other companies that are already listed? You'd rather look at them?
Well, the other companies in this particular space have not done really anything great in the last couple of years, we all know. Well, LG might interest us, but I think the valuations are something that still remains very challenging. How to view this particular LG even if it's priced around 1,100 rupees, I think it's not so easy to really recommend this particular stock. On a long-term basis, yes, but on a short-term basis, I may not be a ready investor to commit at these prices. I will prefer to wait and watch. Still post listing, maybe we can have a look at that, how this thing is going to pan out.
Very interesting, because those guys are priced at 35 times trailing, with the management speaking about mid-teen sort of margins and 3,000 crore PAT over the next couple of years. The listed peers, all of them are trading between 45, 50, some slightly higher than that as well. That's the that's the chart that has come up for you on the screen. Our director very helpfully putting out the peer comparison for all the other consumer durable companies as compared to LG, which is offered at 35 times. But we take your point on board. What's your sense on some of the recent listings? There was Urban Company, a fair amount of growth runway out here, but again, valuations fairly challenging, near triple digits. Do you view Urban Company as an investable idea because of the underlying total addressable market, or maybe avoid because of the valuations?
Actually, as we always feel that since we come from a very fundamental background, these valuations become very challenging, and maybe we are not able to see the kind of growth over the next 4-5 years, which can really bring down the valuations to a much sanity level if you were to take a 4 to 5 year view. But certainly, looking at the overall valuations, no, not really. We would be looking at this particular company, because certainly a triple-digit valuation is not which will drive us to invest in any of the stocks from the current levels.
All right, Dilip, you do a lot of work on ground with regard to some of these unknown companies. Is something that you're working on currently, the last 1 year has not been that great on the headline index, but individual stocks have done well. So just throwing the field open to you, if you could name one company that you believe that could potentially do well from here on.
Sure. I think there is this company called Bajaj Healthcare. I think maybe the market cap is around 1,400 to 1,500 crores. The largest player in vitamin C. This company actually supplies to almost all the multinationals. But some of the businesses that they have got into, for example, the opium business where they have monopoly, which is a huge cash flow business for them. And I think they transition from the older molecules to new molecules and to the new areas, maybe Europe and the rest of the world. So I think this company is doing very well on the transition front from old molecules to new molecules. Also, the average selling price of most of the new molecules will be at least 4 to 5 times higher than what they have been selling up till now. And plus their traditional products, I think, and plus the opium business, of course. So we think that this company has a good potential to maybe triple their profits over the next 3 to 4 years from the current levels. That's a possibility. So I think that's one thing that interests us quite a bit. Without any doubt, we also own the stock. So that's a disclosure that I would like to make.
Okay. So the stock itself in the past 1 month has not done too badly. But Dilip, just talking about a similar theme, a couple of these stocks, the CDMO stocks, Divi's Labs, Newland Labs, all of them seem to be buzzing around today. It's up around 4%. Is your team looking at the CDMO space quite closely, considering that it could be the next big leg of growth when it comes to outsourcing?
Very much so. I think within that space, I think Divi's really stands out because Divi's is the one which has got a huge surplus capacity with them. And more important, I think the trust that Divi's enjoys is far superior to anyone else in that same space. And a lot of, as what I always said, even about Divi's laboratory in the past, whereas world is talking about China plus one, but Europe plus one is really playing out well for India, especially in this kind of a business. And I think Divi's will be the one to benefit quite a bit. And the way they are going about with some of the other molecules too, I think this company looks pretty good. I think over the next 1.5 to 2 years, one can expect about 40 to 50% growth in the stock price. And the fundamentals too will continue to move northwards. We expect a good, healthy bottom line growth of around 15-20% over the next couple of years.
So there's Bajaj Healthcare that you like, IndusInd Bank recovery is what you like, and you believe that maybe, some positive news on Divi's Labs as well. Finally, before we let you go, anything else that you're buying?
No, not really. As what I said, I find the overall valuations not in our favor, very challenging. So I would prefer to wait and watch. Not that I'm selling also at the same time. I would prefer to wait and watch till some of the things are available at a much better rate to our liking.
Anything where you're booking profits?
I beg your pardon?
Anything where you're selling and booking out because of the valuations?
No, not really. As what I said, we are not selling.
Okay, you're not selling, you're not buying, you're just waiting and watching. And if there's something attractive that comes by, you will perhaps go in on that one.
That's right.
All right, Dilip, thank you so much as always for enlightening us with your views on the market, a lot of stocks, and giving us that idea on Bajaj Healthcare as well. We'll track the story as it progresses from here on. Take a short break. On the other side, Rupen Rajguru, who's the head of equity investments and strategy at Julius Baer, joins in with some market talk.
Welcome back. Well, let's get to that big story now on the Tata Group as reports of infighting emerge at Tata Sons. Sources tell CNBC-TV18 that trustees of Tata Trust will be meeting government officials later today. Parikshit is breaking this exclusive story and joins in with more details on that. Parikshit, over to you.
Well, yes, meetings between key trustees of the Tata Trusts will be meeting the cabinet ministers in the union government. Why is all of this important? This is because key members of the Tata Trust are saying that there are 4 trustees who have staged a coup. This includes Darius Khambata, Jahangir, Pramit Javeri and Mehli Mistry. And they've tried to emasculate the leadership of Noel Tata, and they want to function as a super board. What we've been told by sources is that government can no longer be a silent spectator to what is happening and to this coup attempt by 4 trustees of the Tata Trust. At the same time, the government is fully seized of the matter, and hopefully there will be a resolution soon. What sources have told us that there have been serious corporate governance lapses as a result of the acts of these 4 trustees led by Darius Khambata, who in the last few weeks have not only demanded that they approve the appointment of independent directors by the NRC or Nomination Remuneration Committee, but they should also be able to approve the minutes of the board meetings of Tata Sons. So what sources are telling us that these 4 members cannot act like a super board, they cannot undermine the leadership of Noel Tata, and they cannot try and drive a wedge between Noel Tata and Tata Sons Chairman N. Chandrasekaran as well. So 3 or 4 key points and asks by Tata Group trustees, and these are going to be put forth in meetings with union cabinet ministers this evening. 1, that the government must intervene, must take note of what is happening, because if the acts of these members of Tata Trust undermines the Tata Group, it will also impact the Indian economy. What they have also gone on to say, and this is likely to be conveyed to the government, is that no trustee can undermine the leadership of Noel Tata. No one can try and drive a wedge between N. Chandrasekaran and Noel Tata. Separation of powers between Tata Trusts and Tata Sons must be maintained at all times. So let's see which way this goes. Those who are in the Tata Group are hopeful that there will be an amicable solution. But net-net, what sources are telling us that currently the Tata Group is in crisis and the government must intervene.
All right, take that point. Thank you for that. We'll most definitely keep an eye out on developments out here. The Tata Group, every time there is an issue, it extends for a fair amount of a period. So we'll most definitely seek some clarity on this one. Parikshit, thanks a lot for that. Meanwhile, a bunch of stocks actually spiking. Dream folks, after having nearly eliminated its entire market cap, is finding some buyers at lower levels. Currently, is in the 5% temporary upper circuit. So we'll watch out for how this pans out. We're also seeing some traction on, Thomas Cook that's spiked. Yesterday we had Yatra and Ixigo do well. Thomas Cook is the other one which has seen a bit of a spike. But a lot of these movers, let's spotlight them. Hormaz joins us. He's by the wall. Hormaz, what's moving? What's shaking?
There's a lot of the names in the broader markets are moving and on very strong volumes as well. Despite the market doing what it does, there are always broader market names that spring up on volumes that you've never seen before. In Indraprastha Medical, one such name today, the top gainer on the small cap index, a 20% upper circuit, the first such circuit that the stock has seen since 2020, the 5th straight day of gains for the stock. The volumes today are the highest since August of last year, and this is only as of right now. And we have already had 50 lakh shares traded on the stock. 20-day average here is just 2 lakh shares, and as a result of this 20% move, the stock has turned positive on a year-to-date basis, and the stock had tripled in value last year, having delivered positive annual returns every single year since 2018. Now, the other one being Uniparts India and auto ancillaries continue to remain in the news in some way or the other. 10% higher today. The stock at one point was up 12-13, so it's cooled off slightly from the highs. The biggest single day gain on record, at least intraday. The volumes are the highest since the listing day that the stock had seen. We have had 55 lakh shares traded here. Look at the 20-day average. It's less than a lakh. 94,000 shares being the 20-day average. Today's turnover so far is already a third of the free float market cap that the company has, which is around about 750 crore. And the stock, despite this move today, remains below the IPO price price of 577. And the last one on the list today is RHI Magnesita. The second day of gains for the stock in the last 11 trading sessions. This is only the second time that the stock has gained in the last 11 sessions. The biggest single day gain since November of 22. Volumes are the highest on record today. 3 crore shares have traded on the stock already in this 13% up move. The 20-day average here is only a lakh, and the stock has broken above its 50-day moving average of 481 and the 100-day moving average of 478. So a lot of movers in the broader markets, RHI Magnesita being one of them.
Right.
Okay. All right. Thanks a lot for that, Hormuz. Well, let's get in, our guest then, Alpha Manager of the Day, Rupen Rajguru of Julius Baer, who joins us. Hi, Rupen. Good afternoon. Good to see you in. It's been a while since we spoke, I think, but good to connect. What are you making of the current market setup? We have the last 1 year has been an absolute flat year, but individual stocks have done a thing of their own. The problem is there are more number of stocks that are lower than higher. How are you feeling about the market? Do you share that optimism that Q2 will be, the worst in terms of earnings? And the second half of the year, we see earnings recovery. And in that sense, you rather buy than sit on the sidelines.
Sure. Nigel, I would say that the Indian markets currently is like a spring, a compressed spring, wherein it has a lot of potential energy. But there is momentum is lacking for conversion of potential energy into kinetic energy. And why do I say so? Why does it have potential energy? Because if you look through from a relative basis, the Indian market has been a big underperformer. YTD, our market in dollar term is 0, wherein the emerging market, which includes India, that index is up 30%. Why? Because China is up 40%. Korea is up 60%. Japan is up 20%. And even Brazil, which again, we are both on the same seat as far as the US tariff is concerned, it's also up almost 35 to 40%. So we have been a big relative underperformer. And what's the reason for this underperformance? Is one of the key reasons is earnings, as you also rightly alluded. Now, here, the catalyst for the earnings growth coming both from the government as well as RBI. Both are in place. So be it fiscal measures, that is by way of tax cuts, both direct as well as indirect, which according to us will add more than 2.25 odd lakhs crores of money in the hands of people. And the monetary stimulus, that is by way of rate cuts, which in a way also helps. So net, we are positioned for an earnings uptick. So that momentum which is lacking, which as you rightly said, will come from third quarter onwards. And the earnings growth, which has been in single digits for now 8 quarters, which probably will be similar in this quarter as well, but it will move into healthy double digit from Q3 onwards, and that will add to the momentum. So to answer your question, yes, we have been a big relative underperformer, and all the necessary impetus is in place, and probably from December quarter onwards, we should start seeing a double-digit earnings growth, which will lead the market higher.
Okay, all right. This double-digit earning growth, Rupen, hi. Thanks very much for joining in. This is Ekta. Just wanted to understand, what are you penciling in for the consumption plays, considering that we would probably see the GST benefits seep through by then as well?
Hi, afternoon, Ekta. Yes, if you ask me, one big macro theme from an India perspective, which will do well, at least initially, tactically, we have to see structurally how it pans out. But tactically, for a few quarters, would definitely be consumption. And as I said, that almost 2.5 odd lakhs crores of money will come by way of direct as well as indirect. And also, you add to it, banning the RMG, which is the real money games, which will also add further 20,000-30,000 crores in the hands of people, which was otherwise going that on that side. So the question is that how will that money be utilized? While the leverage in the system from a personal loan perspective is there, so some part of that will be used to repay the leverage. The other part definitely would be saved, and money will come into savings through the investments and other revenues, and also a chunk of that money we believe will get into consumption. So that clearly has a big multiplier effect. So and if you see, consumer as a sector had a dream run between say 2010 and 19, that decade all of them got re-rated in a significant way. And for last 6 years, it has been a big underperformer. It has seen derating. While on absolute basis, staples still are not cheap, but some of the consumer discretionary and durables clearly we believe will be winners in this. And to answer your question on the overall earnings growth, consumer will play a big role next year. And also corollary to that, some of the banking channel which are into retail consumption, which majority of banks are, and NBFCs also will attribute to the overall growth, and hence the overall profitability of that segment also will be pretty strong in FY27.
So if you had to bet on the sectors that will lead this double-digit growth, it's financials, some of the consumer discretionary names. What else?
So hi, Mangalam. On the growth side next year, on the consumption also, telecom is one sector where we believe the earnings growth will be pretty strong. Probably upwards of about 20-25% on a PAT level, while there is one big company which is listed out there. So as I think you rightly said, the financials, probably the earnings growth will be at anywhere between 18 to 22% growth. I am talking about FY27 vis-a-vis FY26. The challenge, if at all, from an overall earnings perspective, will come through whether we have to see how the IT earnings pan out, and we believe that IT earnings also are close to bottoming, and in FY27 over the base of FY26 we'll see a decent growth. We have to also take into consideration the INR depreciation. So net, I think combination of financials, consumptions, also telecom, and to some extent, the largest market cap company also, which has a play of consumption embedded in that also will lead the earnings growth.
What's your sense in terms of what IT could probably do in the next 3 quarters? We are kicking off earnings soon enough. What's your sense?
Yeah, Ekta, IT has been in the news globally for all reasons related to AI, and in India for reasons not related to AI, because the Indian IT services, and in fact historically, till this year, beginning of this year, there was a strong correlation between IT sector and NASDAQ, and this year it has been broken purely because of this mega theme of AI, which the entire has taken the world by storm. And an Indian IT services company are missing in that space. So that relationship has been broken, and we, in fact, not only us but globally, Accenture, Genpact, all have been big underperformer this year, down anywhere between 20 to 30%. So have been the Indian IT services. So at this juncture, while as I said, earnings growth still will be a very anemic, but we have to also see from a stock market perspective. As we speak, the large cap IT companies are at, say, if I were to take FY27 earnings, are on an average at around 20 and some at even 19 odd P multiple. And in fact, in your channel only, I had said once that probably when there is no growth in the sector, which is what we are seeing right now, that the range for IT becomes 18 and 22. So probably becomes a buy when it comes to 18. So we are slowly getting into that level, and probably at 22, 23, it becomes a sell because there is no earnings growth. And why is it an earnings? Why is it a buy at that level? Because at that 18, 19 P level, the dividend yield or the FCF yields becomes upwards of 4.5%, which becomes very attractive. I think the known unknown is AI, and we believe that the Indian IT companies, like the way globally Accenture has pivoted, I think everybody wants to get themselves ready to also adapt AI for improving the overall efficiencies, which they can eventually pass on to the clients as well. So there will always be a phase in which there will be a consolidation and then the growth. And in fact, mind you, we believe that 2 years down the line, the kind of use case which AI enterprise will have, I think Indian IT services will play a big role out there. So net, to answer your question, it looks pretty attractive to, one can start nibbling into large cap IT names at current.
All right, start nibbling into large cap IT names. That's what the street has been doing as well over the last few trading sessions. It's been trying to find its feet. Rupen, always a pleasure speaking with you. Thank you so much for joining in and giving us your sectoral calls, your view on the market, where you believe that it is a compressed spring, may perhaps jump from here on. But it's actually come off from the highs right now. The Nifty is holding just above that 25,100 mark as against closer to 25,200 when we were at the start of the show. And what's actually taken a leg down are a couple of these PSU banks. SBI is lower, and all these FMCG names, they are seeing a sharp sell-off. So pull up any of those. Asian Paints lower, we have Titan, which is lower, and a lot of these consumption names. HUL2 is at the low point of trade. Perfect time to get in, Nigel, with all the updates from the FNO desk. Nigel.
Well, the 25,150, that's the crucial mark, right? And it'll be interesting to see which side of that do we end, because in today's trading session, well, the 25,150 call, the premium's down to zilch. The 25,150 put out there as well, the premium had come down drastically. I think at the start of today it was around 77 rupees. That's come down to around 10 rupees approximately, because this contract will expire in the next 20 minutes or so. So for the timing, it appears we have a bit of a range. The high and the low of the day should most probability get protected, though we are moving closer to the lower end of the range. The 25,120 is where we are at, which is the 61.8% retracement of that entire move that we did see. Individual stocks are in focus. We are seeing fresh buying on a couple of counters and massive open interest build up. Vodafone, the stock is up by close to around 6-7% in today's trading session. But take a look at the open interest build up. Massive open interest build up is what we're seeing on Vodafone Idea. Also, the other one is IGL. Well, the open interest built up over there. I think it's in excess of around 15% today. And that stock as well is moving up with a gain of close to around 5%. So fresh buying on both those two counters. We are seeing a bit of a short covering bounce on a couple of other names like Geo Finance. Remember, that stock moves in tandem with regard to the big boy Reliance Industries. And in today's trade itself, in the cash market, it's up. But you are seeing some of that open interest being shared, which is telling you there's a short covering bounce playing out here. And all eyes were on BSE because there was some bit of a breather that's come in there. But CDSL is the stock actually that's seen a bit of a short covering bounce. So it's yet another day of a positive close in all probability. However, that weekly expiry volatility and some kind of a fight at around the 25,220, that's the reason why the markets have come off the top. Back to you guys.
Okay, all right, Nigel. Thanks very much for that. So yes, 25,100 is currently where the Nifty is at. So it's off the day's high as we speak. Bank Nifty is also sheaved off a significant amount of gains from the top. At one point in time, it was up around 0.4 to 0.5%. So it is, seeing some amount of profit booking from the top. We'll take a short break. And as always, we'll get you buy today's, sell tomorrow calls from our technical expert next. Stay tuned.
Right, the Nifty is all but given up its entire gain right now. It's below the 25,100 mark too, sitting with a gain of just 19 points. Remember the high on the day-to-day, 25,220. The Nifty is, about 110 points below that right now. Very closer to the lower end of today's trading range, which is slightly below that 25,080 mark. So we'll watch out for how close pans out on the Nifty. What's dragged it lower apart from the FMCG stocks, we have Infosys, which has come in at the lower end of today's trading session, come in for some selling. Reliance too, from the highs, has corrected about 1%. So both these stocks actually weighing down on the frontline index. In fact, if we stay on the Nifty for a bit, we might see it go into the red as well right now. Axis Bank is also lower. The banking names too coming off. So good time to actually bring back Mitesh. Mitesh, your view on the index and the tomorrow trade?
Yeah. So on the index, as I said, we've had about 4 days of rally, so pullback could always happen. I think that's coming into play. I think the first support will come in closer to about 25,020, 25,000 zone, which is 70, 80 points lower from here. And on the stock side, Gas Authority is a BTST for me. GAIL Gas Authority, BTST with the stop about 178 for targets, 177.90 for targets around 182, and IRFC is the other one. That's also BTST. Keep a stop just below levels of 125.5. Look for targets of around 128.
Okay, all right. Let's now focus on a stock which has actually picked up pace in just the second half of the trading session. IGL is in focus following changes in taxation on gas sourced from Gujarat. Sonal is here to explain why exactly the stock is up around 6% and how would they benefit from these tax changes. Sonal, over to you.
Thank you so much for that. Well, there's a tax cut which has come by. Now, remember, these companies, the city gas distribution companies, they pay VAT on sourcing of gas, be it LNG or APM gas. The news now is that there has been a cut in taxes. Earlier, there was a 15% tax in terms of VAT from any sourcing that came in from Gujarat in terms of gas. Now, it has been cut to 2% in terms of central sales tax. So, there's a 13% cut that has come by. It was in talks. There have been talks about cutting this tax and taking it to sales tax. But GAIL was not agreeing to these terms earlier, but now it has come by, something that the company had indicated earlier as well. Now it's a positive, right? 13% cut in your sourcing costs, and that is why IGL tends to benefit a lot, because they source around 3.5 to 4 MMSCMD of APM gas coming in from Gujarat itself. This would mean, according to analysts, that there is a 20% EBITDA benefit that the company will get, which is around 1 rupees per SCM on their EBITDA overall. Equirus says that IGL's EBITDA will be up by 20% because of this. The cost savings will be to the tune of 360 crore rupees. Now, they can either pass it on to the customers or utilize some of it because of higher gas costs and currency depreciation as well. But yes, it will be positive for their PNL, and that is the reason IGL tends to benefit the most and the stock is higher in trade.
Okay, all right. We do have Jay Bala of Cash the Chaos who's joining in now to discuss the technicals of the market. And Sonal, thanks very much for that. IGL, as you can see, is up around 6%. Jay, hi. Thanks very much for joining in this afternoon. But let's start by talking about a stock such as IGL, which is spiked up around 6%. Have you looked at the technicals? What do they look like?
Yeah, I have looked at Indus Gas. See, most of the gas stocks are looking sideways to mildly bullish. So I would look at it as an avoid more than anything. They are slightly positive. They're not on the downtrend. So the recent low of 202 for 200 odds for IGL, that could be a stop if you are long. But I think the fresh 52-week highs are likely to come a little later. Probably there'll be a wait for it.
Right, let's talk about the index then, Jay. I think you were talking about higher levels and you were sticking to that view. Even when we were at 24,500, 24,600, just the last week itself, you said that this is a bit of a pause and then we're heading up. You would continue to maintain your long bias?
Yes. Thank you, Nigel. The markets are trying to hold the critical support at 24,440, 24,357. And they've come back to about 25,200. And the markets are facing a very important headwinds in the form of macro headwinds. While Reliance is showing some positive signs, I don't know if the local factors will trump over the global macro. So I suspect the global macro will win over the local factors. If Reliance can manage to close above 1410, I think there'll be something very specific to India, and the markets could head much higher. But I believe we might be in for a Q4 pause, because the US markets are in a late stage of the rally that started from April, and the dollar index and the US 10-year yields, they've also possibly reversed.
All right, Jay, we'd request you to stay on. The Nifty is just about hovering around the 25,100 mark after testing lower levels of trade today. Once again, towards the end, Divi's Lab continues to move higher, up around 5%. Bajaj Auto is the other one, which continues to gain from the front line pack as well. Take a short break, come back, focus on the markets, a lot of stocks, and more market talk lined up for you on Closing Bell.
Welcome back. Well, we're still in conversation with Jay Bala. Jay, Normally you give us a couple of stocks. If I remember correctly, Sandur Manganese was a stock that you'd given us earlier, and I think that stock has done quite well. For today's show, what do you have for us? Give us one or two picks.
Yeah, I have one more from the metals space. That's RHIM Magnesita. The stock is, doing something very interesting, possibly bottom for the medium to long term. But even if the stock hasn't bottomed for the medium to long term, it might rally in the short term to somewhere about 590 to 630. So stop loss of 434. 434 was an important turning point. From there, the stock went up 15% today, and it's pulled back lower, and it's offering possibly a better entry point. Stop loss of about 434 hence. But bear in mind, we are in the late stages of the rally. You want to allocate lower than that you normally usually do. And the second is a pullback play on Maruti. If the markets are going to go up, it's going to be because of autos and Reliance. And from the auto space, I believe Maruti has an incomplete structure. So a stop loss of about 15,700 with an objective of 1,700. Bear in mind, again, we are in the late stages of rally. Your allocation has to be much smaller.
But RHI actually has gone through a proper bear market, Jay. So what are the levels you're looking out there? I'm not sure whether there is some fund-based action today, but the hope fundamentally is that quarter two, at least the volume growth will look good. That aside, on the charts, where is that one headed, and when does that bullish view get negated? Currently, it's at around 480 rupees.
That's right. The long-term bullish view is very much intact, and the stock is looking very interesting. In the long term, the 2025 low, that's the negation point for the bull case. But today's price action says the short-term move that started from the 2025 low, that's completed a secondary correction. So, and the next leg of the up move is possibly started, and it can possibly go to fresh record highs. But I want to be more conservative. That's the reason why I'm projecting 590 to 630. And if it gets there really quickly, if you have one more follow through to today, I think the stock is headed for much higher levels, and that's much stronger level.
It's a shot in the dark given a binary event in the next few days. But do you have a call on Vodafone Idea? It's up 9% right now as we speak.
Yeah, I think it's in the long-term downtrend, but in the very short term, it's heading for somewhere around 10.5. Or it could be possible that it could have even seen the short-term high today. Today's high might turn out to be an important top. So, within the long-term downtrend, it's in a short-term up move. My personal projection was somewhere about 10.25 to 10.5. But, if it tops out today, I won't be surprised. I think in the long term, it will bottom somewhere around $5 or $4.
Okay, all right. So that's on Vodafone Idea, which is at an 8-month high today. So there's a lot of optimism once the UK Prime Minister does have that meeting or makes his trip to India. So that's one particular stock which will be in focus through the week. But Jay, just wanted to ask you about Brigade Enterprises. Have you looked at that stock? It's up 3.8% now. It's picked up a little bit of pace today. It was quite quiet, not done much this year. But anything within that space and on this stock specifically?
I've been positive on real estate since May, and Brigade was one of the first few stocks that formed a base, but it's pulled back quite deeply. So the recent low of about 880 has the potential for the stock to form something like a double bottom. The stock is very strong in the medium to long term, but not completely sure if the real estate sector is bottoming in the near term. If it does, the real estate sector, if it's bottoming out, that will definitely turn around Nifty, because 2022, it was the real estate which led the market up. And if real estate is bottoming, it's doing something very interesting for the overall markets. But I'm not fully confident yet, so I'm watching what the real estate stocks do over the next couple of days.
Jay, if you could help us out with Brent crude prices, what are the levels you're looking at out there?
Yeah, Brent is heading for fresh 52-week lows. It's heading back to test the April low of $55. This is the WTI, not the Brent. This is the light variety. I haven't looked at the Brent variety closely, but it varies from the WTI by about $2-3. So extrapolate that. So I believe first it will take out 55, and then there'll be a shallow short-term bounce. Then it's heading to 48 to clock a long-term bottom.
All right, Jay. And Jay, all that glitters is gold?
Yeah, you might want to be very careful there. The dollar index, like you pointed out in the opening comments, it's likely to turn around. Right now, it's all gold, but usually the history of precious metals is that it goes to a very sharp up move and then reverses equally sharply. That we have seen that in 1980s, 2008, 2011, and 2020. So watch out for it. It's in the very, very late stages of the rally. You might want to keep trailing stops. The trailing stop for gold is about 3,800. Trading stop for silver is about $46. These are COMEX levels.
Right, Jay, thank you so much for joining in. We'll obviously continue our conversation on the other side of the market closing on markets forward. Meanwhile, the last few minutes of trade belong to the railway stocks. Look at RVNL, look at Titagarh Rail Systems, IRFC, Ircon, all of them surging. Perhaps some sort of center-based ordering activity taking place out there. And we can continue to start wrapping, Nigel.
Well, that's right. The stocks of the day really were these railway themes, that did do well. The other pocket that did do very well was Avalon, Amber. These stocks, in fact, were up and about in today's trading session. So the EMS pack actually did bounce up in today's trading session. Pull up some of them. Amber, you have Avalon as well. That should come up for you on the screen, as well as Gains. All of them did buck the trend in trade today. From the pharma pack, we have, Divi's Laboratory that was up and about, that was up close to around 5%. And the hope trade continues to play out on Vodafone Idea. The other couple of names that did do pretty well in today's trading session were the likes of CDSL as well as BSA, post their exclusive coming in from my colleague Yash. On the flip side, Hitachi Energy came in for some profit-taking. Trends numbers are not as good as they were earlier. Bharat Dynamics as well was down in trade today. And Britannia was down close to around 2%. We had the management of Parley saying that they have gained close to around 0.75% of market share, probably at the expense of some of the competition. May or may not be Britannia, but the stock in today's trading session was under some pressure.
Okay, so those were all the stocks which were in focus largely. We have the Bank Nifty, which closed up with gains of around 0.2%. The Midcap Index, which marginally outperformed, you'd have to say, as compared to the Nifty and the sensex. So the Nifty was up around 34 odd points. The sensex, which was up around 387 odd points. And the advanced decline ratio, which could have been really wanting for more, considering that advanced decline ratio ended at on the declining side. But overall, that was the texture of the market. It's a wrap on closing bell. Markets forward will come up next with all the action and the top headlines.